The trading floor of the Philippine Stock Exchange was electric in mid-2017, buzzing with anticipation and the hum of opportunity. Every corner of the room seemed alive with energy, as traders watched the numbers with bated breath. Tickers flashed green, numbers soared, and the closing bell rang out, a triumphant signal of change. The sound echoed through the hall, marking not just the end of a trading day, but the beginning of something bigger. Headlines declared a new dawn for the Philippine economy, with analysts calling the country Asia's comeback kid. Newsstands across Manila buzzed with excitement, and television screens replayed the story of a nation on the rise. This wasn't just a market rally, it felt like a turning point, the payoff for years of reform and perseverance. The sense of accomplishment was palpable, as investors and traders celebrated a hard-won victory. For decades, the Philippines had been labeled the sick man of Asia, lagging behind its neighbors and struggling to keep pace with the region's rapid growth. Old images of Manila told a story of missed opportunities and hardship. But in 2017, the narrative shifted as the stock market shattered records and international investors took notice. Flights arrived daily with business leaders eager to explore new possibilities. Optimism spread from the trading floor to the streets of Manila, fueling hope for better jobs and improved lives. The city pulsed with renewed ambition, and everyday Filipinos began to dream bigger. The government's push for fiscal discipline and infrastructure spending made the country more attractive to business. New highways, bridges, and office towers signaled a commitment to progress and modernization. Global investors seeking new growth markets saw the Philippines' young, English-speaking population as a major asset. The workforce was not only skilled but also adaptable and eager to engage with the world. The surge in confidence was a reflection of real progress and a sense of national pride. People gathered in parks and plazas, celebrating the country's achievements and looking forward to what lay ahead. Headlines like, "Philippine stocks hit all-time high," captured the moment. News anchors spoke with excitement, and social media buzzed with messages of hope and congratulations. For ordinary Filipinos, this meant the possibility of a brighter future. Parents imagined new opportunities for their children, and students saw doors opening that once seemed closed. The energy on the exchange floor mirrored a nation ready to step onto the world stage. Business leaders spoke of ambition, and the flag became a symbol of unity and hope. The bell's ring was not an end, but the start of a journey to turn optimism into lasting prosperity. As the sun rose over Manila, a new chapter was beginning for the country and its people. The Philippines was finally poised to claim its place in a rapidly changing Asia, ready to embrace the challenges and opportunities of a new era. After 2017, foreign investment poured into the Philippines at an unprecedented rate, transforming the economic landscape almost overnight. Investors were drawn by the promise of high returns, political stability, and a young, skilled workforce eager to participate in the global economy. American, Japanese, and European firms rapidly expanded their presence, especially in BPO and manufacturing, creating hundreds of thousands of new jobs and opportunities for Filipinos. Call centers and IT hubs spread beyond Manila, reaching cities like Cebu and Davao, fueling a consumer boom and lifting many families into the middle class. American companies dominated the BPO sector, while Japanese firms integrated the Philippines into global supply chains, bringing advanced manufacturing techniques and new export opportunities. These investments brought not just money, but also cutting-edge technology, management expertise, and global best practices, making the Philippine economy more competitive and resilient. But a new player emerged, China, investing heavily in online gaming, real estate, and massive infrastructure projects, changing the investment landscape. Chinese capital added fresh dynamism, but also new layers of complexity, subtly reshaping business alliances and setting the stage for a delicate geopolitical balancing act in the region. The Philippines now face the challenge of navigating a new era filled with both unprecedented opportunity and significant risk, as it balanced relationships with old allies and new partners. China's interest in the Philippines was strategic, not just economic. The archipelago's location, at the crossroads of vital shipping lanes, made it a crucial piece in Beijing's regional ambitions. Billions flowed in under the Belt and Road Initiative, funding bridges, dams, and telecom networks. These projects promised modernization and jobs, transforming skylines and connecting remote communities. This economic embrace tested the Philippines' long-standing alliance with the United States, a partnership rooted in decades of military cooperation and shared history. The government sought to leverage both superpowers, welcoming Chinese investment while relying on U.S. security. It was a delicate balancing act, with every move watched closely by both sides. Chinese-funded projects began reshaping the landscape, but tensions simmered over the South China Sea, where territorial disputes threatened to overshadow economic gains. Some Filipinos welcomed the opportunities, seeing new roads, jobs, and business partnerships as a path to progress and prosperity. Others feared growing dependence on China, worried that economic ties could erode national sovereignty and leave the country vulnerable to foreign influence. The U.S. watched warily, emphasizing its defense commitments and reminding Manila of the enduring value of their alliance. Philippine leaders faced a complex diplomatic dance, balancing economic gains with sovereignty concerns, and navigating the expectations of both Washington and Beijing. The country was no longer a passive player, but an active participant in great power competition, shaping its own destiny on the world stage. The strategic dance grew more intricate, with Manila hedging its bets between Washington and Beijing, seeking to maximize benefits while minimizing risks. The Philippines was now a key player in the 21st century's geopolitical chessboard, its decisions echoing far beyond its shores. Its choices would shape the region's future, influencing peace, prosperity, and the balance of power in Asia for generations to come. The Philippines' geography, over 7,600 islands, is both a blessing and a challenge. Fragmented infrastructure makes nationwide development difficult and costly. Instead of factories, the country has long relied on its people, millions working overseas, sending home vital remittances. Remittances lift families out of poverty but create dependence on foreign labor markets and a brain drain. The rise of the BPO industry changed the game, exporting services without exporting people. Digital connectivity, not roads, became the new lifeline, helping overcome geographic barriers. The government's focus on digital infrastructure aims to unite the archipelago and build a modern economy. The Philippines is learning to turn its unique geography into an advantage for the digital age. The Philippines sits at the heart of Southeast Asia, a gateway between the Pacific and the South China Sea. 1/3 of global shipping passes through these waters, making the country a key player in global trade. Its strategic location places it squarely between U.S. and Chinese interests. The U.S. relies on Philippine ports for its Indo-Pacific strategy. China seeks control over the South China Sea. The Philippines' proximity to disputed waters makes it a frontline state in regional tensions. Decisions in Manila have direct implications for the balance of power in Asia. The country's geography gives it leverage few others possess. No longer peripheral, the Philippines is now central to the region's geopolitical chessboard. Its choices will shape the future of the Indo-Pacific. China's Belt and Road Initiative promised to transform Philippine infrastructure. Billions were pledged for bridges, railways, and ports, unlocking economic potential and connecting isolated regions. Projects like the Binondo Intramuros Bridge and Mindanao Railway created jobs and addressed long-standing deficits. Improved infrastructure attracted more foreign investors, spurring broader economic growth. But reliance on Chinese funding raised concerns about debt, transparency, and sovereignty. Debates erupted over loan terms, use of Chinese labor, and environmental impacts. The government had to balance rapid modernization with careful risk management. Chinese investment was a double-edged sword, offering opportunity but demanding vigilance. The Philippines' greatest asset is its young, growing population. With a median age of 25, the country enjoys a demographic dividend: more workers, fewer dependents, and a vibrant consumer market. In contrast, China faces an aging workforce and shrinking labor pool. Chinese firms invest in the Philippines to tap into its youthful labor force, especially in manufacturing and construction. Young Filipinos drive innovation, digital adoption, and the booming BPO sector. But to realize this potential, the country must invest in education and job creation. Without quality jobs and training, the demographic dividend could become a liability. Harnessing youth is the key to long-term prosperity. The Philippines walks a geopolitical tightrope between the U.S. and China. The U.S. offers security, China fuels economic growth and infrastructure. Leaning too far toward either risks economic or security fallout. Aligning with the U.S. could provoke Chinese retaliation. Pivoting to China could leave the country vulnerable in the South China Sea. The only viable path is sophisticated diplomacy, engaging both powers, maximizing benefits, and minimizing risks. This means welcoming investment while standing firm on sovereignty. It means military cooperation with the U.S. and dialogue with Beijing. Hedging allows the Philippines to maintain autonomy and pursue its interests. But as US-China rivalry intensifies, the middle path grows narrower. The stakes for Philippine leaders have never been higher. Despite economic growth, inequality and corruption cast a long shadow over the Philippines. The benefits of the boom are uneven. Many remain trapped in poverty while a few grow wealthier. Corruption diverts public funds, weakens services, and favors elites over fair competition. Rural areas lag behind, driving migration to overcrowded cities and straining urban infrastructure. This disconnect fuels frustration and undermines trust in institutions. Tackling inequality and corruption is essential for sustainable development. Deep reforms, stronger rule of law, transparency, and investment in education are needed. Without them, economic gains will remain fragile and prosperity out of reach for many. The Philippines stands at a crossroads, poised between opportunity and risk. Its geography, young population, and global attention have fueled rapid growth. The challenge now is to turn momentum into lasting, inclusive prosperity. Navigating US-China rivalry will require deft diplomacy and strategic autonomy. Internally, the country must tackle inequality and corruption and invest in human capital. Building strong, transparent institutions is key to sharing growth more widely. The nation's future will be shaped by the choices made today. With bold leadership and reform, the Philippines can become a true regional leader. The journey won't be easy, but the potential is real. The story of the Philippines is still being written by its people, for its future.